Welcome to the monthly market insights. We'll go ahead and dive in. I'm actually on the road this week, so doing this from the hotel, but that is all good. So what we like to do with these monthly market insights is just kind of talk about some of the questions that we're hearing from clients so we can pass along the information, because I'm sure the same thing is on your mind. And so we'll jump right in there. Nora, if you want to go ahead and get started.
Absolutely. Well, welcome everybody. Like Sean said, this is the monthly market insight for the month of April, where we share our monthly insight on market moves and economic news, share what questions that we're seeing and hearing from clients and the news. I know it's kind of 24-hour cycle, so we'll try to address some of those questions and concerns that you may have. And so, Sean, before we get into, I guess, some of the questions in hot topics that we're hearing, can you share with us some year-to-date performance, just a little temperature check with now that we're starting the first trading day of May? Can you just kind of show us and tell us what indicators, how the market's performing as we get deeper into 2021?
Yeah, so the S&P 500 for the year so far is up over 11%, about 11.3%. The NASDAQ, kind of following the tech companies, is up about 8.3%. So we're seeing some differences in terms of S&P 500 being the Fortune 500 companies of America. Think of your Home Depots, your Coca-Colas, Googles, Facebooks. And then you've got the NASDAQ, follows more tech industry, but also has some of those Fortune 500 companies in there. Companies like Zillow are on there that may not be Fortune 500. So there's kind of some of the differences there. Last year, the NASDAQ did much better than the S&P 500, but we're seeing some reversal on that so far through the year. Not that there's necessarily any trend there, but maybe some overvaluations in the tech industry that a lot of people are talking about. But one of the things that I think is very important to point out with kind of year-to-date performance is if you go back and look at just all the fear that happened over the last 14 months and how many people, whether it was someone at the water cooler at work or an uncle at Christmas or Thanksgiving party, talking about how much fear and scared and you should not contribute to your 401k or you should get out of the market. Well, if you stayed in the market, your portfolio has been positive. And then in November, we saw a lot about the election, administration changes. I'm, pulling all my money out. Those are some of the things that we heard from clients. And we said, you know what, we've been through election changes in the past. We've been through pandemics. If you stay invested, it's going to be the best result. And so far it has been. So we're starting to see some grumblings there. We're starting to see clients call and say, well, what about this estate tax hike? What about tax law changes? All this is really scary. And again, we've got to go back and kind of repeat. We went through this last March. We went through this last November. The markets have responded positively. And a lot of that's because of a lot of the underlying performance factors and things that are going on in the economy right now that are leading to some of this growth. So year-to-date, markets have done really well.
A question just popped up, Sean. Why do we use the NASDAQ and S&P as a good indicator on how the market's performing? Yeah,
so the S&P 500, the Fortune 500 companies of America, is really kind of the benchmark for all things, right? A lot of people talk about the Dow Jones Industrial Average, and sometimes I'll hear people talk about that, but realize that's only about 30 different stocks in the U.S. Across all different cycles. It was developed in the late 1800s as kind of the first benchmark to compare how the markets are doing. But as the S&P 500 came along, that really became a much better barrier. It ultimately, is going to give us a good, accurate representation of about 80% of how the U.S. economy is doing. So that's why I like to use it. It's just very simple and easy to talk about and explain. The NASDAQ, most people don't have in their portfolio. It's not in most people's 401ks, so it's a little bit interesting. It is in our portfolio, and that's because there's some research that shows there's actually a premium in the NASDAQ compared to the S&P 500. So those are the reasons that we talk about those things. In those different funds, the S&P obviously has about 500 different stocks. The NASDAQ has well over 100 different stocks. And so when we buy that, it's kind of a good example of how the U.S. economy, just the U.S. economy, is doing compared to maybe your portfolio or kind of risk adjusted portfolio. But understand there's no bonds in there. That's an all equity, all stock portfolio.
Okay. So another topic we want to talk about today. So we all know Warren Buffett, right? He is CEO of Berkshire Hathaway, and they just held their annual shareholder meeting over the weekend. So got some articles, the news covering on how he kind of tackled some of the market's hottest trends. So thought we would address some of those. We hear them a lot. We've addressed them a lot, these topics on our monthly market insights. First one being cryptocurrencies, your Bitcoin, your Dogecoin, probably pronouncing all these wrong. There's so many of them coming out, and they're still coming out, right? And so, Sean, can you kind of talk to us about cryptocurrencies, maybe Robinhood, other hot topics such as SPACs that we've heard in the past year? Tell us what those are, how they may impact your portfolio. Is there something investors are missing that they should have in their portfolio?
Yeah, so it's something that I'm hearing a lot about, right, and really have over the last 6 months. And so I'll kind of give my thoughts on cryptocurrency. So really, right, we use a cryptocurrency for kind of two purposes. One is a storage of value, right? Someone saying, hey, we're going to buy into this as an investment. We're trying to get rich quick ultimately off of it. And that's what most people are buying into cryptocurrencies for, is a storage of value as an investment, hoping that it goes up. The other side of it, and really where the word currency comes involved, is cryptocurrency would be used as a means of exchange of goods and services, no different than a dollar or a euro or something like that. And the unique thing is that the only people using it to exchange goods and services are people that are trying to avoid taxes, so they're hiding taxes, doing something illegal, or people that are involved in drugs, sex trafficking, all sorts of criminal activities, because no one can kind of trace it. And so it's funny because people buy into this to try and get rich quick, and they throw their morals right out the window very quickly, because ultimately all they're doing is giving more money to criminal networks and people trying to steal from the government, not pay taxes. And so we've got these kind of two competing interests. And ultimately what it comes down to is people are buying into it because they're trying to get rich quick, right? People want to be a part of, they hear the stories about buying a pizza 20 years ago for 1 Bitcoin, and now that was a $56,000 pizza. And people are like, wow, I want to be a part of that. And so I'm also humble enough to know that I don't have all the answers. And so it's possible, right, that all of a sudden this becomes a new currency, and it takes over the dollar and the euro and the pound and really every currency across the globe, and it becomes this new status quo. I'm not saying that's impossible to happen. It could happen. It's just it's never happened in the past. And so it's hard for me to say that that is a good decision. That being said, if someone said I wanted to put 2% of my portfolio in a cryptocurrency, I'd be hard pressed to say that that was a terrible idea. And so I do think there could be a place for it. It's not something that I would do with any of my clients' own money, but if that's something that you're looking at, just be careful. You know, you brought up Warren Buffett. He's got a very, very awesome quote where someone asked him, how come everyone doesn't invest like you? It's so simple. All right, and I'd like to think that Bolt Financial Group invests the same way. Very simple, straightforward, based on evidence. Well, that's Warren Buffett. We got that from, you know, him and the likes of others. But he says a quote, the reason people don't invest like me is because no one wants to get rich slowly. All right? Everyone's looking for the quick diet pill. Everyone's looking for the lottery ticket. Everyone's looking for the Bitcoin at a fraction of a cent, and it goes up to $56,000 a Bitcoin. And so when you get involved in those things, you're taking on a huge amount of risk, and you just need to make sure that you're not going to hurt your family or your long-term goals by doing so. So that's kind of my thoughts on cryptocurrency. Most people don't realize when they buy into it that they're actually funding criminal activities, which I also think is unique because ESG funds, environmentally, socially, and governmentally responsible, mutual funds and ETFs are also like all the rage right now. So it's funny that people are buying into Bitcoin, throwing their morals out the window to get rich quick, but then also more dollars flowing to ESG funds. So that's kind of one takeaway from the Buffett conference annual meeting, which I think is always amazing and very insightful. And we're the kind of the same way here at Bolt Financial Group. So just take that into account. Some of the other things you asked about, SPACs, special purpose acquisition companies. Those are people that say, hey, we want to start a company, and we're just there as a way to help other companies that are currently private go public. And so they start a company, they become a public company, they've kind of got a couple targets in mind, and they ultimately make it more easily to go from private to public, because normally that process takes months, sometimes a year long to get through. And so because they're already a public company, they buy the private company, and then they've already gone public. It kind of eliminates a lot of the red tape. What's interesting is they've been around for a while, but they're getting a lot of push right now. And that's because what they'll do is they'll hire a celebrity We've seen Shaquille O'Neal do them, other celebrities, and they essentially hire a celebrity to go promote their SPAC, and then they take on a private company and ultimately try to boost the initial IPO of that SPAC, if you will, as they've got some kind of more followers, more people interested in it. And there's really a lot of research that shows none of them have turned out to do very well. So again, a lot of people, a lot of bankers will create these products to do these things because they make so much money on the transaction cost. Not necessarily the best thing for your portfolio when you look at the data. One of the other things that's very unique that a new product that's out there is NFTs. And so you'll see those in the news. That's what we call a non-fungible token, right? And if that sounds crazy to you, it does to me too. But this non-fungible token, these NFTs, is essentially digital art. So for example, in a Bitcoin, if I give you one Bitcoin, it's still a Bitcoin, right? We can each have a Bitcoin. We each have the same thing. Well, a non-fungible token is some type of electronic media that is non-fungible, which means it's not easily replaced. There's no other copy of it. For example, if I send a tweet, right, and this is what people are buying, right, for thousands and thousands of dollars. If I send a tweet, someone will buy the right to that tweet. So it doesn't matter, that can be copied, by multiple people. There's a video that was that someone paid $6.6 million for. You can still download the movie, online. It doesn't cost you anything to watch. But someone bought that for $6.6 million, the original rights to it. And so I guess it's becoming like this artwork, right? You may have the Mona Lisa, and because you own the only Mona Lisa, you've got, something that's worth a lot of value. People are doing the same thing with the tweet, even though you can see it a bunch of other places where you could replicate the Mona Lisa. It's not the original. So that's kind of where these NFT things are going. If it's really hard to wrap your brain around, it is for mine too. I can't believe people would buy a tweet or some type of video that can be easily replicated, but they own the original rights to it. And so people are paying big money, tens of thousands, sometimes millions of dollars to these non-fungible tokens online. So those are some of the products that are out there. Ultimately, right, that's an asset class that does not have a lot of history to it. We'll stick to the basics here at Bolt Financial Group. Just want to make sure that if you are getting into those things, you don't buy into the sales pitch. People will sell products because they make money on transactions, and they don't necessarily care about your wealth going up. So that's something to take in mind. And I'll kind of take that back to Bitcoin. Sorry, I'm getting a little long-winded here. This is always interesting stuff. The same is true with Bitcoin, right? We're seeing people ask us, well, we see institutional money come into it, right? We're seeing Wells Fargo and JP Morgan and all these people starting to put money into it, or, Tesla saying, hey, you can buy a Tesla with Bitcoin. Well, understand this when it comes to the big banks. Just because they're putting money into it doesn't necessarily mean that they believe in it, right? If we go back to 2008, right, not that long ago, we saw collateralized mortgage obligations and packaging of subprime lending mortgages and putting them all together and putting a stamp on them that they're great. We've seen some of these big banks open credit cards in people's names. Banks will do whatever they can to create transaction costs, right? They'll buy into it because they're making exchange traded funds, they're making mutual funds to sell cryptocurrencies, and they want to sell that stuff as much as they can. And so they're going to pour money into it in time and marketing because they want that asset to go up because they can sell it. So just because institutional money buys into it doesn't mean or doesn't provide a legitimate concern to go in and buy it. Realize that bankers and large institutions want to sell you junk just as much as they did in 2008. They want to do the same thing in 2021. Okay, so always think about those things when it comes to what's happening in the market. And some of these products are out there to get rich quick. Again, usually it's not going to work out in your best interest.
And Sean, I think one thing to point out about cryptocurrencies is the way that it's taxed. I know a lot of people talk about selling Dogecoin when it's at a high, making a profit, getting into Bitcoin. And one thing I think we need to make sure that investors are aware of is that Bitcoin's taxed similar to a stock, right? So can you tell us a little bit about what that means, Sean?
Yeah. So, for example, if I buy something and it goes up in price, and if I don't hold it for a year, I have to pay ordinary income tax on that, right? So I see a lot of people like, oh, I bought it in yesterday, it went up, $10,000 or whatever, and I feel great about it. Well, I'm like, well, you just had to pay 33% in taxes on that $10,000 gain, that you had because you didn't hold it for a year. So with all investments, if you hold them for less than a year, it's tax ordinary income rates. If you hold it for longer than a year, it's tax at capital gains tax rates, which is a favorable tax rate down to 15% unless you make over 400,000. Goes up to 200 or up to 20%. So realize that if you buy into something and try and sell it really quickly, there's large tax consequences for making those decisions. And so when people do tell you these stories, realize that there's a lot more to it that they probably don't know or haven't taken into account that will essentially erode some of their return. So what we're seeing, if you haven't filed your taxes yet, right, you've got till May 17th, file your federal tax return. One of the questions that you'll be asked is, did you buy and sell any cryptocurrency? And then you're gonna have to go ahead and make an ethical decision whether or not you want to disclose that or not, and hope that the federal government will never find a way to figure out who that was because it was protected through the blockchain and all that, right? That's a decision that you'll have to make ultimately. You know, the government is trying to and starting to ask about these things, and so it may not have all these tax savings advantages that you want. You get audited, they find out those things, right? Everything is traceable in this digital world. Ultimately, if they see a large deposit put in your account, they may ask for it if you got audited, and you have to explain where that came from. So things to think about should you want to get into those types of investments.
Okay, I appreciate it, Sean. That's all the questions that we had for the month of April. If you continue to have questions, just send those over to Sean and I. We'll make sure that we address those as we head into the monthly market insight for June. So everybody have a wonderful May, and we'll see you back here in a month.